I'm John Hanna for CDTV.net, and we have Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. Good afternoon, Greg.
Good afternoon, John.
How are you doing today, sir?
Well, we're doing really well.
Real well is good.
Yeah, we just got back in from the a great trip out in Carlsbad, California. Went to the Altegris Strategic Investment Conference and got to hear some great investment managers, but also economists, and network with some good people. And so I think you and I are going to be talking about that later this week.
Yes, we're definitely going to save that for Friday. We're going to have a more in-depth conversation about what you've talked about this coming Friday.
So I'm back in Oklahoma and come back to about 85, 90 degree weather after being out in Carlsbad with, in the 70s and cool, nice and cool. And now, back in Oklahoma, but you got to love it.
Well, 85 degrees sounds good because we have currently here in New York City at 64.
Wow. Well, it's 85 plus the humidity of about 85.
Wow. Well, I don't care for the humidity,
Yeah, exactly.
So what do you have for us this week, sir?
Well, John, when I was in Carlsbad last week, the Dow hit its highest point in more than 4 years on Tuesday, and it was basically downhill for equities after that. And investors decided to take some of their year-to-date profits off the table, advance of some of the key European elections over the weekend. So you had the S&P, the NASDAQ, and the Russell 2000, and the Global Dow all had their worst week of 2012 last week. And the Dow's 168-point loss on Friday gave the industrials their second worst week of the year. So we're starting to see some volatility creep into the markets. And the selling helped the 10-year Treasury yield hit its lowest level since early February as prices rose. Prices rose on the Treasury, so the yields have gone down. Meanwhile, oil prices slid below $100 a barrel, and gold reversed the previous week's gains, falling almost $30 back to $1,634 an ounce. So as of last week, John, the Dow Jones is up only year-to-date about 6.72%. S&P roughly 8.9%. As we speak, today, which is May 7th, and you're looking right around 1 o'clock Eastern Time, the Dow and the S&P have been down most of the day, not quite 0.5%, but now they're turning positive. And of course, all the headlines is about Facebook's roadshow and the initial public offering. That could create some excitement for the markets, at least in the near term. Last week's unemployment, or some of the headlines we had, on the U.S. side, we had the unemployment fell to 8.1 in April, 8.1%, according to the Bureau of Labor Statistics. At first glance, it says, okay, good, the unemployment rate is shrinking. However, when you look below, the news and the headlines, the drop was largely the result of people leaving the workforce. In other words, not having that unemployment claim check. So the economy really created only 115,000 new jobs, and that's substantially lower than the 154,000 jobs that was added in March. And so, the U.S. service sector, we take a look at some of the other indicators on the U.S. side. We grew in April, but the 53.5% reading by the Institute for Supply Management was 2.5% lower than the one in March. However, the ISM's manufacturing index was up 1.4% from March for a reading of 54.8% and a 33rd consecutive month of expansion. And U.S. construction spending rose just 0.1% in March, and despite a 1.1% decline in spending on public construction, such as state and local highways and schools. And the Bureau of Economic Analysis said consumer spending rose just 0.3% in March, and incomes grew 0.4%, helping to nudge the savings rate up slightly to 3.8% of disposable income. And then we have fixed-rate mortgages hit record lows once again, according to Freddie Mac. The 3.84% average rate for a 30-year fixed mortgage was almost a percentage point lower than the 4.71 of a year ago. And 15-year mortgages were at 3.07 compared to 3.89 last year at this time. So interest rates, at least on the long term, continue to come down. And that's very positive for those who are wanting to buy a home. And so you combine the both affordable prices of real estate and historically low interest rates, you have a great buyer's market. We just need people to get jobs so they can afford to take out a loan. Really, over the weekend, we had the big news. Everybody's looking toward Europe. And I guess the theme would be off with his head. And that's what's happened over in France. The frustration about Europe's finances that previously brought down heads of state in Greece and Spain and Italy took its toll on French President Nicolas Sarkozy. The election of Francois Hollande, who campaigned against the fiscal austerity and budget discipline measures supported by Merkel's, the German chancellor, which is Merkel and Sarkozy, creates uncertainty about the future of those measures. So the political parties that comprise, the Greece ruling coalition suffered losses in the country's parliamentary elections and raising questions about whether a reorganized government would support the austerity program required for future bailout assistance. Then you had Spain. Gross domestic product contracted for the second quarter in a row, and that officially put the financially troubled country into a recession. And coupled with Spain's struggle to implement austerity measures, a recession could make it more difficult for the Eurozone's fourth largest economy to reduce its budget deficit and meet sovereign debt guidelines. The country also received a second piece of bad news when Standard & Poor's downgraded the credit ratings of 11 Spanish banks. And meanwhile, the European Central Bank kept its key interest rate unchanged at 1%. So, with the kind of anemic jobs picture kind of creeping back to the headlines with the jobs report, and then also the European situation, the uncertainty that the new change in leadership in France and these other issues going on in Spain and elsewhere, that this could bring volatility back into the markets, at least in the near term.
All right. So, I was going to ask you about the Facebook. Just a quick note on Facebook. What are your thoughts about the offering price? Well, there's been a lot of controversy, but opinions on how to value the shares of Facebook. It anticipated it would be a much higher price, but I think what we'll see is that investors, you'll see some initial hype, I think, in the IPO, and those who want to get in on it. And I think the demand will probably be strong for a while. But, it's always good to watch a stock, especially an IPO in that first year, because typically you do get a lot of investors, especially a big, broad company like Facebook that has a lot of a lot of interest in. Many people will just be buying it just because of the name, because they get on it. And so, long term, it'll depend on the growth and the growth curve of Facebook on how it will perform. But I think you'll see a lot of a good amount of hype and probably increased interest in buying the stock, at least in the near term. Okay. That's Greg Womack, President of Womack Investment Advisors, joining us from Edmond, Oklahoma. And I'm John Hanna for CityTV.net.